Another live news update here at Kalkine TV. I'm Rose Jacobs. Thanks for joining me. Google's parent company Alphabet reported another quarter of solid growth, capping the final 3 months of fiscal 2021 with a 32% jump in sales to US $75.3 billion, despite antitrust hurdles. Shares of Alphabet jumped more than 7% in after-hours trading. The results beat the average analyst's forecast of US $72 billion, according to Refinitiv data. In addition, the revenue of US $74.9 billion was more than the average estimate of $71.652 billion. The search giant's advertising, hardware and cloud computing segments benefited from holiday shopping. It was the company's third straight quarter of record sales. The company also announced a 20-for-1 stock split in which shareholders as of July 1, 2022 will receive additional 19 shares subject to the shareholders' approval for the split. Alphabet CFO Ruth Porat said the company aimed to make shares available to more buyers. Google, which generates most of its revenue from internet ads, said it lost some sales because of company's product trimmed budget and new iPhone privacy measures during the third quarter. In the last quarter, however, its ad revenue rose by 32.5% against the average. Analysts expect Google to continue its lead in internet ad sales over its rivals. Its secondary businesses, including cloud, also lifted the overall sales. Cloud revenue rose 45%, higher than the expected. Also, its fiscal 2021 profit increased by 89%, while sales rose by 41% year on year. Alphabet shares gained 43% over the past 12 months. Let's look at the regulatory hurdles that Google is facing. Google faces regulatory challenges in the US and Europe against its search, ad tech and app store businesses. It also faces allegations of secretly collecting customers' location data. The US and the European Union plan to bring laws to curtail its market dominance. The proposed US regulations aim to limit Google's ability to preference its own businesses and force it to divest its ad tech unit. These challenges would increase its legal expenses and discourage it from going for acquisitions that could invite regulators' ire, saying analysts. Wall Street Journal reported that the company could be forced to discontinue some of its business to comply with the court rulings or new laws. Over the past quarter, much of Google's revenue came from e-commerce ads as businesses moved online to overcome the pandemic disruptions. The tech giant had partnered with the e-commerce firm Shopify Inc. to simplify the search listings and ad purchases for merchants. Google has been increasingly under pressure from investors to diversify its business, although its digital ad segment still accounts for over 80% of total sales. It is investing in a cloud computing unit to compete with established players like Amazon.com and Microsoft. And that's the latest in the news breaking updates. I'm Rose Jacobs. Thanks for joining me.